Botox because work stresses me out. Lip filler because I just have to look good. It's all write-off, right?
Not good advice at all. Don't listen to this one. Hi, I'm Nate. I've been a CPA for 12 years. I'm also the founder of Cookie Finance. We are an accounting platform for content creators. And today I'm going to be reacting to TikTok videos on taxes.
Here's a tax loophole that influencers use to save millions on taxes, and the IRS definitely doesn't want you to know about this one.
Okay, so before I even go on with this one, I'm just going to stop right there. But anytime you hear someone say, the IRS doesn't want you to know this one trick, it probably is not going to be good advice, but I could be proved wrong. Let's see.
It's called Section 162A, and it allows you to write off anything that you use in your content as a necessary and ordinary business expense. And since influencers have a personal brand, they're able to write off many personal things that normal businesses can't. For example, luxury cars, watches, clothing.
Now, when you're talking about luxury cars, I mean, you can try to write that off. I'm just going to tell you, you're going to get audited. Those are like the biggest red flags with the IRS. If you're writing off your brand new Porsche in a yacht, you're going to get audited. Don't do that. But there are some personal items that you can write off. So he was kind of right about that, but you need to stop at some point. Don't go too crazy with writing off every single little personal expense or you will get audited. So this video, I'd rate this a 2 or 3 out of 10. He got like the first little bit right, and then he completely lost me at the very end.
Another thing that was like really cool that we got to find out from Dad is that there's a lot of stuff that we can write off, which is like a tax write-off is basically, I thought at first that it meant that like basically it was free.
Wait, I still don't understand that.
Yeah, if you guys need to watch the clip of David from Schitt's Creek.
Do you even know what a write-off is?
Yeah, it's when you buy something for your business and the government pays you back for it.
A lot of people don't know what a write-off is or a deduction or a business expense. So let me just break that down real quick. A deduction or a tax write-off, all that means is it's a legitimate business expense.
You are a content creator. It does not matter the size. This is everything you need to know this upcoming tax season. As a content creator, you are considered self-employed, which means anything over $400 needs to be reported on your taxes as income.
Okay, so let me stop right there real quick. Huge myth. I hate this. It doesn't matter if you made $1 on TikTok. You need to report that on your taxes. There is nothing that says, you know, if you made less than $400, don't worry about it. No, the IRS wants you to report every single dollar. So right off the bat, bad advice, no matter how much you've made, you have to report it. Sometimes people say like 5,600. This person's saying 400. That is wrong.
You need to be saving at least 30 to 40% of anything you make from social media. It covers both your self-employment tax and your income tax. When you work for a company, they pay for half of your FICA contribution. And I hate to be the bearer of bad news, since you're self-employed, you are both the company and the employee, which means you're responsible for both halves. Self-employment tax is currently 15.3%. 12.4% is Social Security tax, and 2.9% is for Medicare. And then your income tax will vary based on your overall income, placing you in one of these tax brackets.
All right, so that was actually really good advice. She said 30 to 40% of everything you should make, you should set aside for taxes. That might be a little aggressive. I'd probably say more like 25 to 30% would be totally fine. So if you made $10,000 from a deal, set aside $2,500 into a separate savings account. That is great advice. Self-employment taxes, that's great advice. 15.3%. It's a sneaky tax that we can talk about. Maybe there'll be another video on this, but so far all of that was great advice, but maybe not 30 to 40, probably more like 25 to 30.
Use tax deductions to your advantage. Any necessary expenses for your content creation can be used to deduct from your overall income, lowering the amount you pay taxes on. Some common deductions are rent, gas, mileage, travel expenses, Wi-Fi, subscriptions, and so forth. For instance, if you use your phone to film or post all your content, go ahead and use it as a deduction.
Everything she mentioned, those are all deductions. And there's a lot more that you can deduct as a content creator. A lot of creators, they don't deduct enough. I think they're too scared of the IRS that they're going to like wake them up in the middle of the night and throw them in jail so they don't take any deductions. Everything she mentioned, those are great deductions, and there's a lot more that you can take as a creator. So overall, I would rate this TikTok probably about a good 8 or 9 out of 10.
When it's tax season and your accountant asks you to get you a list together of all your write-offs, cheek filler because I have to look good at work, temple filler because I can't look like a peanut head at work, Skincare because I have to stay young. Botox because work stresses me out. Under eye cream because work makes me feel like I look like I didn't sleep. Lip filler because I just have to look good. It's all right off, right? I mean,
Okay, you can't use because it makes me feel good, it makes me look good because I'm tired. You can't use that as an excuse. Write-offs need to be necessary for the business and an ordinary part of the business as well. Those are things you can write off. You can't write them off because they make you feel good or whatever. Anything that's injectable, fillers, you cannot write that off. It is in the tax code. There is case law against it. You cannot write off plastic surgery, cosmetic surgery, Botox. This is definitely a lot of really bad advice on this one. I'd give this one like a 2 or 3 out of 10, maybe even lower. Not good advice at all. Don't listen to this one.
So tax write-offs is one of the reasons it's so important if you are self-employed to keep track of all of your expenses. Because yeah, you might be making this much per month as a hairstylist, but then you have rent, you have product, you have classes you're investing in, all these things that are then lowering your income.
Yeah, so that's like the number one piece of advice we tell creators. If you're just starting out or if you're more seasoned, keep track of your income and expenses. It'll make your life so much easier. Then you aren't scrambling at the end of the year, digging through thousands of transactions, trying to piece everything together. This is great advice. As you go along, we recommend once a month at least, go through, organize all of your income and expenses, keep track of those. That is extremely good advice. That's awesome.
Anytime I pick up a drink on the way to work, I get lunch while I'm at work, I DoorDash something, I pick up dinner on the way home from work, all of those things I'm putting on my business card because that's me feeding myself while I'm working and that's a business expense. Also, my husband and I each have our own car. So my car, I always put my gas on my business card because I'm driving to and from work, so this is my business car.
Yeah, so the meals, I agree. You know, if you're going to meals and talking about your content, your strategy, if you're doing DoorDash and Uber Eats because you're working late and you're producing more content, we are totally comfortable writing that off. That's not terrible advice. The car, once again, you got to be very careful with the car. They have 2 different cars, and she said that she uses hers for content, her business, so she's writing off of those things. That is definitely okay. Just make sure you're not saying it's 100% used for business, unless you're like at a construction company and you have a truck. Most likely she is using her car for personal. If you put 100% that your car is 100% for business and you're a content creator, it is a huge red flag because most likely not everything she's doing is going to be used for her business.
One amazing thing you can write off is education. Anytime I purchase a ticket to a class or online something that I'm going to use for my business that's like educational, I put it on my business card and then I can write that off.
Okay, so let's talk about education. It is true. If you get an online course, you can definitely write that off. You go to Kajabi and you want to look up some creator and learn how to do some type of digital thing, you can write that off. Now, what you can't write off is college expenses or your student loans. So don't write off your student loans. Don't write off college courses. You cannot write those things off. But if you're just doing an online course, it's a 3, 4, 5 hour course, 8 hour course, 100% you can write that off. That's great. Overall, this great advice. So I'd give this one a good solid 9 or 10 out of 10. She did a great job.
Yes, you can write off those exotic luxury cars on your tax returns.
Okay, I'm just going to stop right there. I don't know why people think they can just like write off their luxury cars on their tax returns. I see this all over TikTok. No, the auto deduction is one of the biggest red flags. Don't get cute. Don't try to write off your brand new Porsche or your brand new Ferrari saying it's a marketing expense. Most likely it's not, and you're going to get audited and you will lose that argument. I can almost guarantee that. But let's see if there's any redeeming parts of this.
How to do it. You just have to use them in your business. Drive them to these kind of events. This is a business event. That's business miles. You can write it off in your business. There's no like numerical amount that there's a limit to it. Go ahead and buy them. There is a rule. If your car's over 6,000 pounds.
Okay, just because you buy your brand new Ferrari and you drive it to work, it doesn't mean it's a business vehicle. Now, if you work in construction and you buy a truck and you use it to haul lumber and material around, yeah, then you need it. Once again, is it ordinary in a necessary part of your business? No. If you get audited, the IRS is going to be like, Really, bro? Did you really need to buy a Ferrari to drive to the grocery store for your content? Like, don't try to get cute with writing off your supercar.
So say you bought a G-Wagon for $300K. It's over 6,000 pounds. You get to deduct 300,000 on your tax return.
And that's the other big misconception. It's like it has to be over 6,000 pounds, otherwise you can't write it off. That's not true. You just get a bigger deduction if it's over 6,000 pounds, or a bigger portion of it can be deducted in the first year. But regardless of the size, you can write off a portion of the vehicle right away. So don't feel like you have to go buy a $300,000 G-Wagon to like get an auto deduction. That's not true. So overall, this video, I give this like a 1 out of 10. Just a lot of really bad advice on this one. Don't listen to this person at all.
Here's 4 reasons why you should register your LLC in Wyoming. 1, it's relatively cheap. The filing fee is about $100, and if you have a registered agent there, it's typically about $100 a year. That's very low as compared to Tennessee, where our filing fee is $300.
I get this a lot. I see this type of TikTok all the time. I'm really excited to see what he has to say. But the first part is correct. It is cheaper to set up an LLC in Wyoming compared to other states, but most states it's pretty cheap. It's $150, $250, $300 a year. It's not a huge difference. You're not saving tens of thousands of dollars a year compare one state to the other. So, I mean, that's kind of not a great argument for that.
The second reason is it's a no tax state. Whatever money your Wyoming LLC makes, it's not going to remit any taxes in the state of Wyoming. So you're not going to owe any taxes to Wyoming.
Okay. This was a really sneaky thing. He said it correctly, but probably what you heard is that if you have your LLC in Wyoming, you do not need to pay taxes in Wyoming. That's not what he said. He said the LLC does not need to pay taxes in Wyoming. And guess what? In almost every single state, except for like Tennessee, the LLC does not pay taxes. An LLC is what's called a pass-through entity. It means all of the income and expenses passes through the LLC onto your personal tax return, and then you pay taxes on that net income on your tax return. So if you're living in California and your LLC is in Wyoming, all of that income and expenses passes through the LLC in Wyoming into your personal income, and then you pay taxes in California. So there are 0 tax savings by having the LLC in Wyoming for you. I give this like a 3, maybe he gets like 25%, so like a 2.5 out of 10 because he got like 25% of it correct. So overall, there was some good advice out there, some really bad advice. I think what's really hard about just social media in general, TikTok, is it's really hard to know what is true and what's not true. Some people come off as very authoritative and they're like, this is what you should do. And you're like, okay, that's what I should do. And then you get audited and, bad things happen. Other people we had some advice on there that was really good, rock solid advice. What we recommend is go to a trusted provider, book a time with us. We'll talk with you for 30 minutes completely for free, talk about taxes, anything else you want, and make sure that you're very clear on what you should and shouldn't do. Don't leave it up to chance that advice you're getting is true or not.
Tax, bookkeeping, and accounting services exclusively for content creators and influencers. That's Cookie Finance.